Welcome to SANSETO Capital. So today we are going to see what our SANSETO Trade Master Indicator gives. SANSETO Trade Master is your guide to success. This is being presented by Thomas Elonathan and Sandhya Chinadurai. First, we would like to showcase what is the agenda of this video. So in this video, we're going to cover introduction about our indicator. What are the suitable markets for the indicator you can use? The key terms, you should be knowing it before you start using the indicator. What are the entry, exit, and stop loss strategies we can follow? And what are the places you can avoid the trades? We'll give you some guidelines like these are the places you can avoid the trades. Let's see an indicator in introduction. So we named our indicator SANSETO Trade Master Indicator. Our indicator will elevate your trading strategy, and our indicator is built on top of TradingView Pine script, and our profitability and accuracy is comparatively higher than the other indicators. Being like if you're trading on your own, our indicator really helps you in enhancing your profitability. So after a lot of market research, went through different types of indicator, different types of concepts, different types of market dynamics, we combined everything together and we created this indicator. So what are the key features and sophisticated concepts which are bundled together and you're getting as one indicator is? You will get advanced support and resistance, you'll get price action analysis, you'll get smart money concept, you'll be seeing volume divergence. The volume is a key in any market. Some people are thinking like when the market is moving up, the price is moving. No, the big players can manipulate the price, but not the volume. So the volume divergence is the very important area. So you have to always check on this point. This is very important. Where are the big buyers and seller zones? This is another like support and resistance only. We have used some artificial intelligence concept wherein the support and resistance will be forming automatically in the live market. You don't have to plot them. Our indicator will do automatically. We have used exponential moving average. We have used buyers and sellers order blocks. If you already know there is a seller block, you will not go for a buying, you will go for a selling. Same goes for buyer order block as well. So our indicator consists of this as well. And ADR CD zone average daily range for the past 10 days, you will get advanced plotting of everyday demand zones and demand zone and supply zones. You'll get this. Alert flags. The alert flag be associated with volume divergence. You will see you can create some alerts. Will guide you how the alerts can be created. And fair value gaps. If there is any imbalance candle has been created in the market, you will be able to see a fair value gap, and whether it's a seller fair value gap or a buyer fair value gap, you will come to know. We'll showcase you that as well. And this previous day 5 minutes high and close, this is mainly only for the Indian market. The previous day last 5 minutes high and close will act as a major support and resistance level, and this is very important. We can show you that as well. And 100% buyers and sellers candles. If one particular candle has 100% buyers, the market likely to go up. Or if the candle has 100% seller, the market likely to go down. So that's what we are trying to showcase here. So these are the key terms, key features in SANSETO Trade Masters, which has been combined everything together. And based on our terms and conditions, some of the tips and tricks what we are going to give you in this video, this can really enhance your trading method. Next, we'll see what are the market our indicator is suitable for. So globally, we have different types of markets all around the world. So we have Indian market, we have US market, we have MCX market, We have crypto market and forex market. In Indian market, you can use our indicator in NSE BSE index, any stocks, any options, any futures. In US market, S&P 500, Dow Jones, etc. In MCX, people who are trading in gold, silver, crude oil, they can also use this. People who are trading in cryptocurrencies like Bitcoin, Ethereum, Solana, and more other currencies, they can use it. In forex market, you can use it in any pair, USD pairs, GBP pairs, JPY pairs, Euro pairs, and any pairs. So literally, this indicator is compatible with any tradable symbol available on the TradingView. So this indicator is built on TradingView with the help of Pine script. If you can able to see your tradable stock or Bitcoin or a foreign currency pair, whatever it is, if this is available in TradingView, you can use our indicator. Irrespective of any market, our indicator works because according to our concept, be it any market, there will be only two common things, buyers and sellers. These buyers and sellers are available in all the market. So our concept is not like any 1:2, 1:3 risk reward ratio. No, our concept is buyers are trying to take sellers money, sellers are trying to take buyers money. This is the key concept. On considering this concept as a baseline, we built our indicator on top of this. So all our key entries, all our entry points, exit points, everything will be based on these factors only. We are not looking for any 1:1 ratio, 1:2 risk reward ratio, 1:3 risk reward ratio, because there is no such things. I've seen many people uh, uh, guiding this way. You can take like 1:1 ratio, 1:2 ratio. Even I was also taught by some of the instructors, you need to close 1:2 ratio, 1:3 ratio, 1:5 risk reward ratio. And I was always having things like, if based on my stop loss only, my risk reward is being calculated. But if my stop loss is like 50, 100 points, how my risk reward will be calculated? So this concept is not required according to SANSETO Capital. It may work for others. It is working for so many people, the risk reward ratio. We are also going to take the risk reward ratio only, but we will not think in 1:2, 1:3 risk reward ratio. We will see only points, how many points we can capture, where are the stop losses available, what are the targets available, how we can manage our stop loss will be guiding you. Let's understand the key terms before you start using our indicator. These are the key terms you need to be aware, and mostly you need to remember them as well. Okay, let's start it. So let's start with, this is the name or symbol. You can see a description or image. Mostly it will be an image only. So the first thing you need to know is buyers, big buyer zone or support zone. How this looks like, you will be seeing all this in the indicator. So we are just giving you a small picture how it looks like. So if you see like big buyer zone and support, this is a strong support. Okay. Similarly, big seller zone and resistance, you can see resistance and big seller zone. This is a strong resistance. Okay. Next, we have a high price, normal price, discounted price. So this is how the high price has been tagged, normal price has been tagged, discounted price has been tagged. So high price, if any price, any stock or the premium reached high, it's likely to fall to normal price. From normal price, it can go to high or it can come to discounted price. From discounted price, this price can go till normal price or it can come back to discounted price again. So the normal price is the equilibrium price, we call it. Okay. Next one, red CD zone, green CD zone. So this CD zone is like a ADR zone. If it is red, this is a resistance. If it is green, this is a support. So our entire indicator is built based on support and resistance only, but different types of support and resistance. So we have one support, we have two second support, we have third support, we have fourth support, and we'll be having fifth support as well. So when there is like five and sixth support as well. When there is six supports, it will be six resistance as well. We will tell you why we have different types of support and resistance, and why this is really important to make a note of them. So now we completed red CD zone and green zone. This is a resistance, this is a support. Previous day 5 minutes high and close. This is mainly for Indian markets only. Other markets this is not applicable. Only in the Indian market this is applicable, because in the Indian market the previous day last 5 minutes high and close is this can act as a support or resistance. Though the first line and the second line, this is like a 5 minutes time frame. Whatever the candle close, it's like a big candle or small candle, doesn't matter. High of the candle, low of the candle will be marked for the next day. Assuming today is like day one, this is the closing of the candle. So low of the candle, high of the candle will be marked, and this will be marked for the next one full day. So this is like this can act as a support, or this can act as a resistance one, resistance two, or this can act as a support one, support two. And the last support and resistance is called EMA. So here we have used 14 EMA. So we call it like katana. So it's katana we used to call like samurai sword. This is very, very, very powerful sword. This one particular line, this can act as a support as long this is respecting. If this is broken, this will become a resistance. So people who are already trading, they will be already aware. If one support is been broken, that will become a resistance. If one resistance is broken, that will become a support. So I hope everybody know about this. If anybody is not knowing some of the basic concept, SANSETO Capital have a course for that. It's called SANSETO Masterclass, Trade Masterclass. You can opt for the course, and you can start learning. So we have something called no trade zone. So you can see this red CD zone and green zone and this zone. So we have 1, 2, 3, no trade zone. If any candle is traveling in between these lines or touching these lines, at least in between these lines, touching these lines, beginner traders do not go for an entry. Okay, this we call it like a no trade zone. So we will be showing you like why no trade zone, what are the impacts of no trade zone. If any candle is touching, coming, touching, coming, touching, coming, why you're not supposed to do a trade. These things and all we'll be explaining in the next session, next video. Okay, let's continue the key terms. So you'll be understanding some of the candlesticks you need to aware of. So here we have colored some of the candles, so you need to aware what are these. So let's go from the left side, volume divergence candle. So this volume divergence candle, we marked it like a yellow candle with a flag. Okay, why this flag? You can create an alert. We'll show you how to create an alert, and you don't always have to look into the market. Whenever there is an alert coming, that time you can jump into the market and see what is happening in the market. What is this volume divergence is? The market is going on in one direction, and in one particular area, the market is going to reverse. Either the market is going to continue or it's going to reverse. So this volume divergence is saying it is a volume imbalance. Something is going to happen high and low when the high and low of this candle is breaking. This is the very, very important point, or maybe important candle we need to use in our indicator. Okay, whenever there is a yellow candle, you will be always seeing an opportunity. Okay, it depends like on what time frame you're using, what market you're using. For now we'll be explaining this in the Indian market, Nifty and Bank Nifty. Okay, so the second one which we want to explain is fair value gaps. Whenever there is a sudden move is happening in the market, so this market will leave some imbalance orders. So these imbalance orders are like fair value gaps. Whenever there is a fair value gap is happening, the market will likely to move up, but at one point in time, the market will come back and hunt all these imbalance orders. The same goes for this is a seller fair value gap. This is the buyer fair value gap. So in seller one, the market is falling, sudden fall, and this is a fair value gap imbalance is creating. Similarly, when the market is moving, there is a sudden movement. If the movement could because of anything. There will be too much of price manipulation done by the institutions or big players might have entered, but this fair value gap is always have to fill back. Okay. Another thing is when there is a fair value gap, one fair value gap is created, there will be three different levels: 20%, 50%, and 80%. So we'll show you what is this 20%, 50%, 80% in the real market, so that you'll understand the whenever there is a huge fair value gap is created, either this will touch the 20%, or this will touch the 50%, or this will touch the 80%. Either these 3% of the candle will be always hunted, but when that will be hunted, we never know. Market also will never know. We will explain you how these things can be predicted so that we can travel along with the market. The next one is 100% buyer candle. So we marked it like in one particular candle, if there is 100% only buyers, let's highlight this into blue color. So when there is 100% buyers in one particular candle, market likely to move up only. This is a small minor prediction. This candle you don't see it very often, but when this is happening, the market only on the uptrend. Similarly, the seller candle, whenever there is a 100% seller in one particular candle, only 100% seller in one particular candle, the candle will be marked as a black color. Okay, so that you'll understand, okay, there is some strong selling pressure here. Whenever there is a pullback is happening, with the market likely to go up. So people who are all aware of price action concept, the market will not go in one direction. The market always come back like a pullback, then continue the trend. That is how it works. Okay. So we are done with the presentation. Let's jump into real trades. What are our entry and exit points? So before showcasing the entry and exit points, I will showcase you how the indicator, how you need to add the indicator, how the indicator settings needs to be checked, so on so stuffs. Okay. So currently we are on Bank Nifty. The current date is 30th. So we are recording this on 30th of July. You can see it here. So we are on a 5 minutes time frame. Our indicator is best in Bank Nifty, any Indian market. 5 minutes time frame is really very good. So we would recommend you to use the 5 minutes time frame. This works on 1 minute time frame as well, but the 1 minute time frame it will work only on the real time market. If the market is after the market, this will not work. The reason because we are allowed to load only 5,000 candles per screen. So our 1 minute will not be having enough 5,000 candles. That will be more than 5,000 candles. So we cannot use this. During the live market, you can use 1 minute, 3 minutes, 5 minutes. You can use any time frame you have here. You can use 15 minutes, 30 minutes, 1 hour, irrespective of any time. You can use this. So we are going to showcase this indicator on a 5 minutes time frame. Okay. So let's start how to configure the indicator and how to do some settings, and we'll analyze like whatever key terms we saw. We will see them one by one. Okay, let's go to indicator. So the latest released version is SANSETO Master 3.6. Okay, just add only this indicator. So the indicator is loading. You can see it here. The indicator is loading. Okay, the indicator is loaded and plotted. You just have to zoom in 2 times, 1, 2, so that you will get clear understanding of a market. So let's quickly go through whatever we saw in the key terms. So number 1, big buyer zone. The big buyer zone is also called as like a support zone. So yeah, so this big buyer zone here, then support zone. So these are two major supports. Then we'll see only all the supports. Then we'll see the resistance. Okay. So this big buyer zone and support zone are the first supports. The next one is, we can see the discounted price. This is another support. You can see the support has been taken here. The next support is previous day 5 minutes high and low. You can see the blue color line has been marked here. If you see here exactly, let me do some zoom in. So on this particular day, previous day, last 5 minutes high and low has been marked. So this will be marked in advance. When the market is opening, this will be already plotted. So you can see this is the support zone. This have respected and taken. Again, this is also the same support zone. This come and taken. In the market, when it comes to market, we cannot put one particular line and we will say, okay, this will take only support exactly at this line. That is very, very impossible. So that's the reason we are giving like a zones. Okay. The next support is our katana, which is like 14 EMA. So you can see here clearly. So when the market have taken a support here, so the market moved little, moved again. It came exactly to katana and moved back. Again, it came to katana. You can see here and moved back. And when how this become as a resistance, we'll see now. Before that, one more support zone which I wanted to tell you is the CD zone. You must have read the key terms. If you see this CD zone, this is a another support zone. Hope you remember this CD zone. It is another support zone. So the market came till here, then it started moving upstairs. So these are the support we have now. So let's check on the resistance level. Okay, as I told you, this is the resistance. You can see this resistance is like CD zone resistance. As I told you, when the resistance is broken, that becomes a support. Okay, so with the market have continuous buyers, so the resistance is broken, then this becomes a support. Now it took a support and moved back, it came down again, it took a support and moved back. So this is how the market works. When the resistance is broken, that will becomes a support. Okay, similarly when the support is broken, that becomes a resistance. Okay, what other resistance we need to see? We need to see the resistance zone. Here we already have one resistance, so the market likely to come up and hit the resistance and reverse. If this is broken, this becomes a support. That is the universal rule. Okay, so now we are seeing the market have started here, moved again, and it got rejected once. Then the market is fall down, then it went back again, then again it got rejected. So two time it got rejected, then the market fall down. Okay, this is how you see the indicator or how this is performing. So here you can see 100% buyers. Here you can see in this candle, you see only 100% buyers. There is no sellers in this candle. So with the help of some scripts, we able to identify like when there is 100% buyers in one particular candle, you will highlight that candle in yellow. So our expectation is whenever there is a buyer candle, the market likely to move up only. So if you check here, the market have moved from the closing of this candle, it moved to 100 points. 100 points in Bank Nifty, it is a really a decent amount. People who are trading in Bank Nifty, if you get 100 points, you know the value of 100 points. Similarly, we'll check the seller candle as we told you. If there is 100% seller in this one particular candle, the candle will be marked as black color. You can see there are multiple seller candles here. Seller candles in the sense like multiple red candles here. None of them are marked as a black one. Why? This candle must have mixed of buyers and mixed of sellers. So that's why we are not marking them. We are not focusing those things, and we are marking only these 100% seller candles. Okay. The next thing is fair value gap. Here you can see the um, seller fair value gap. As I told you, this is the 20% level, this is the 50% level, this is the 80% level. So this is the 20%, this is the 50%, this is the 80%. So as we told you last time, in the fair value gap, when there is a fair value gap is created with 20, 50, 80. So the market will come hunt all these orders, then move back. Okay, the same tomorrow or maybe in coming days, this is going to happen. That is for sure. Okay, whenever this is happening, like when the market is coming, it is comes here. It leaves some imbalance. It leaves some imbalance. The market is here now. Okay, so we need to add one. You don't have to add these SMC concept in your indicator. The reason because we have combined this indicator already, so no need to worry about this. So here we are doing multiple test cases, so we are adding this indicator. For you, SANSETO 3.6 is more than enough. Okay, let me clear the diagrams. So now another reason for selling this area is you can see this red color area. This is called um, seller order block. If you see a blue color here, this is called buyer order block. Buyer order block means this is a support. Seller order block means this is a resistance. Okay, I will just fast forward something and I'll show you how this the market is working. So now let's go, like today we are on 30th, so 29, 26. Let's go few days back. So now we are doing a backtesting methodology. This functionality is available on the essential and premium versions of TradingView only, essential plus and premium versions only. This is not available for normal users, but it is not required. Basically, you can just move this and check as well. Okay, so let's wait for the market closure. So our indicator is also, you can see when the market is closing, this is the opening of the market, this is the closing of the market. This opening and closing have been decided based on the Indian markets only. For other markets, we have to use it differently. We'll guide you how to do that as well. Okay, so the now the market is closed here. Okay, so the market is closed here. So, what are the possibilities we could think of in this day, particular day? So, obviously, I don't remember the charts and whatever is going to happen on this day. So, number one possibility here, there are more sellers are available on the top. So, the buyers, what they will do, they will try to open the market and move it like this. If the market is giving a gap down, this can this is the zone you can see. Let me mark these zones so that you'll clearly understand. So this is a support zone. I'll mark it as green. So this is a support zone. So there is only two possibility. If the market is going up, this will open somewhere here and start moving here like this. If the market is coming down, it can come till here and move towards like this. There is only possibility of going upside the market. The strong reasons are we do not have any sellers. We do not have any sellers available in this area. If you see, this is the big area. So from 10 to 24, we do not have any buyers. Okay, only there are sellers. All their stop losses are safely sitting in the market. So the buyers, what they will do, they will try to take the seller stop loss. Okay, you can see there is no support zone here, there is only resistance zone. If it is a resistance zone, what is literally it is means, these people stop loss is this is these people are safely holding their position, these people are safely holding their position, these people are safely holding their position. So market, what eventually what will do, it will hunt all these stop losses. So that is the power of our indicator. You will know where to enter, where not to enter, where the stop losses are available. Okay, so now let's see how the market reacts. So I wanted to mark these two, like this is the support level for CD zone, and this is the resistance zone for CD level. This will automatically plot as the market has been moving. That's how it works. This is the CD zone, and this is the support zone and resistance zone. Okay, so let me put it in 3 speed and play. Let's see how the market goes. Whenever I want to explain something, I will pause it. See this one. As I told you, the market came and exactly took a support here. We are predefining it already. You know, hope you have seen this. If you have not seen this, just pause the video and just review it one more time. We marked this level already. Okay, we marked this level already because before the market opens, we marked this level already. Then the market is respecting this level. Then now we'll see how the market has been moving. Let's see now. So as I told you, the market is likely to go up only because all the stop losses are available on the top only. Okay, if the market is going, this will take this stop loss first, then this will take this stop loss first, then this will take previous day high stop loss, then this will take this stop loss, then this will take this stop loss. Let's see. So the market is stuck above this buyer zone. Let's see if this is giving a breakout. This breakout can be very good. And one more thing which I wanted to explain is, I told you about the previous day 5 minutes high and low. You could have remembered it. So if you see here, where this previous day high and low can act as a support or resistance, right, as I told you. So the market have opened down here, it went up. The previous day the 5 minutes zone acted as a resistance, then the market moved back again. Another resistance, what is our another resistance? Possibly this is our one resistance, this is our one resistance, second one, and third one is our katana is like our 14 EMA. You can see this is getting rejected here, again rejected, again rejected, again getting rejected. See, you can see how many times this has been rejected. Okay, so these things are clearly giving instruction. Okay, the market has been rejecting only. Why this is rejecting? These are the reasons. Reason one, big seller zone is there. The reason number two, this is below the 14 EMA, which is our katana. Then it is already rejected by the 5 minutes, last 5 minutes. Okay, let's continue. So in the interest of time, I'll just make it like zero point 0.5 speed. I'll pause it whenever there is a huge move is coming. Uh, the next one, we need to always look for, so okay, this one, you can see, so far there is no order block has been formed here. You can see there is no order block has been formed. When there is a candle taking multiple support, this is the order block. As soon as you see the order block, you can see a bullish momentum here. And this is a fair value gap. As I told you, fair value gap means this is giving an imbalance. Big players are entering into this place. Okay, now the first target is done, big seller zone. As I told you, the second target, this will be our second target. Okay, let's see. Okay, so we always have to look for a yellow candle. Whenever there is a yellow candle will be in the running candle, but we need to consider the yellow candle once that is completely formed. Okay, another thing which I wanted to tell you about the last 5 minutes. See here, so far this acted as a resistance, right? Now once this area has been crossed, as I told you, this can become a support. So now this area has been crossed, it came back again, it took a support, it went, it came back again, it is taking a support again. This is the possible target. Okay, let's assume we are entering at this level. Okay, people who are trading, they must be always aware, are already aware of these settings. So I'm just keeping it like stop loss is here and the target is here somewhere. Well, like actually the first point, this is the target I supposed to keep. Let's see. So we are very close to our target. Okay, our target is hit. So now some people might have asked me like why we have kept this such a big stop loss. 70 points in bank nifty is a huge stop loss. Okay, we are not supposed to do this much stop losses. We always have to work based on risk and reward basis only. I am very much sure this will not hit my stop loss, because what people will do, people will keep a stop loss of like previous to previous candle, or like 2 3 candles before. Even if you consider like 1 2 3 4 5 candles before, you will be still hitting the stop loss. Where you need to keep a stop loss is very very important. So how I did a stop loss is, one level, there are like three different support level is available here. Support level number one is there is a order block. Support number two is the 5 minutes, previous day 5 minutes candle. So what I did is, I just kept some buffer. I don't want to keep it exactly here, I just want to keep it like 5 points extra. If I would have kept it like exactly at this point, you can see the stop loss is hit. Can you see this stop loss is hit? So you need to always give it like 5 to 10 points as a buffer in order to take a trade, in order not to hit a stop loss exactly. Okay. So what is our target? So the first point of here, this is our target. And what is our second target? The next point of this is the second target. If you would have exited here, 161 points in bank nifty, it is a really really good amount. For one lot you will be seeing nearly 1500 rupees. Okay, this is really a good one. People who are trading in bank nifty, they will know what is 160 point worth of. Okay, so now here we are seeing 1:2:3 ratio, but from our perspective we really don't see this ratio, because the buyers are trying to take sellers money. Where the sellers are safely sitting, these are the places where sellers are safely sitting. So they will be hunting their stop losses, of course. What if, okay, if the buyers are very strong, they will hit this as well, they will hit the second level as well. Let's see. Done. You can see now this is like 244 points. Let's continue. If the buyers are very very aggressive, they will be they will be going till this level. If the buyers are very very aggressive, okay, I think they have done already. You can see here. So the level I marked, it exactly they reached here. As I told you, the market, if you just draw a one particular line, and assuming like this line is like 451 rupees, and the market came till 4445 something. and you are waiting like, no, when I come, when my target 451 comes, then only I will exit my trade. No, that is a wrong perception, because the market will always leave some orders behind in order to keep them filled in the future. Okay, so so that this will automatically leave these orders, so you need to know how to trail your stop losses. The second, so this is one way of doing the trade. Another way of doing the trade is, here you can see a yellow candle, okay, or a flag candle. Flag and yellow both are same only. Whenever there is a yellow candle is forming, we raised it with the flag so that you can create an alert. How do you create alert? You just go to alerts, create new alerts. I mean, we cannot create alert in replay mode. I'll show you in some time. So how the strategy is, when there is a volume divergence is happening, high and low of the candle is broken, you need to go in that direction. That is the idea. Okay, let's see now. So now this is a yellow candle. Volume divergence is happening. Where this is happening? Near the seller zone. So what I'm suspecting, there is a high possibility that market have moved so far and it is supposed to go back. Okay. So now I'm going for a short position. Where I'm going for a short position? Break of this yellow candle. Okay, break of this yellow candle low. Exactly, break of this yellow candle low. I'm just keeping like exactly uh, high of the yellow candle, or you can have some buffer. I'm having like 5-10 points buffer. So what are my targets here? Where these buyers are available, see now. So these buyers have already hunted previously available seller stop losses, right? Now these are new buyers, so when the new buyers are coming, they will also leave the stop losses. Okay, so let's try to identify where these buyer stop losses will be. So this is a fair value gap. This is the order block is available. This is another fair value gap, and this is the buyer's order block. If our perception, if our expectation is correct, the market should come to till this level. Okay, so we can have multiple set of targets because each people have different types of risk capability. So we cannot give same targets for everyone. So this is a safe trader. This is target one. This is another target, the 50% of the candle I'm trying to mark, and this higher high. I'll show you how I did decided this one. Let's see how the market is going. And one more thing, the market is going to close at this area because this is the end of the day. Okay, let's see how far the market is coming. Target one is done. Safe traders should exit at this level. Okay, as you can see, target one is done already. Target one is how many points from our entry? Target one is 130 points. 130 points in Bank Nifty is like a decent amount. And after that, our stop loss got hit. Okay, so what we used to advise our traders, whenever you are feeling like the market is going to reverse or something, you always trail your stop loss. You just, as soon as your target one is achieved, close 50% of your position and trail your stop loss to cost. Then even if there is any sudden movement, you can safely play your trades. Okay, according to us, the market supposed to hunt these orders, then only move up. Let's see how it goes, because these are the important levels marked by the indicator. We are not manually marking them. Let's see. Okay, great. So now the market did not taken these orders. Okay, just try to remember, the market did not taken these orders, but for sure the market will come back and take these orders. When it will come, we don't know. Okay, let's assume now the market is at the normal price. Okay, before, if you would have noticed, the market was in the discounted price. The market was at the discounted price. So from the discounted price, as we told you, the market will likely to go to normal price. From normal price, the market can come to discounted price, or this can move to high price. Okay, so now we are seeing a possibility that the market can go till high price. So which is the high price here today? I mean, as of this day, this is the high price. So if the market is continuously pushing forwards, this will take this stop loss, this stop loss, this stop loss, if possible this stop loss also, and there is any possible way the market can come back to its own stage. Let's see. We are entering into the trade as soon as we see the fair value gap, and the fair value gap 20% is achieved. We are entering into the trade. 50% of the candle will be our stop loss. Always try to keep your stop loss in bank nifty for 30 to 40 points only, and do not take more than 42 points stop loss. That will easily wash out your accounts. When it comes to nifty, just keep 15 to 20 points as a maximum stop loss. Okay, so now let's see how the market is performing. So target one is done. You can see these sellers were out of the market now because these sellers trades has been taken over already. You can see now this is taken down. So I'm just holding this position as like I'm a risky trader. Okay, let's see how it goes. So the next target is done. You can see next target is done. Let's see how it goes. So the market can reverse at any point in time. Okay, but according to our indicator, these are the targets, these are the orders. The buyers will try to take these orders only. Okay, so now you can see the market is reversing in between. Yeah, see, this is a huge movement, this is a nice movement. Here here if it is a safe traders, what they would have done, they would have exited at this stage and capturing 580 points. They would have entered on another trade, and the another trade will be capturing 800 points. Now you see how the market is going. Since we are doing a replay, this is going very fast, but the market will not go this much faster. The market will go a little slower only. So you'll be able to understand how and why we are going into the trade. So this first trade in the morning session trade, we have captured 587 points, and the second session we have captured nearly 900 points. So in one day we have captured two big moments. So this is the power of our indicator, and you will know where the market is going to fall, where the market is going to create next orders and stuffs. Okay, you can see, as I told you, some people might be waiting like, no, this is the high price, the normal price, it has to come and hit the high price, then only it's supposed to come down. No, it is not like this. That's why we told like trial your stop losses like one, the like first target, second target, third target, like this, so that sudden movement in the market like this will always be safeguarded your trades. Okay, and always keep your stop losses. Without stop loss, do not ever think of doing a trade, because sudden volatility in the market can wash out your accounts in few trades. Okay, it will wash out your capital as well. So never ever trade without any stop losses. Okay, so now the market is on an uptrend. You can see the from discounted price it went to normal price, then from normal price this went to high price and came to normal. So the high possibility is that it should continue its direction, or it should come back and take these orders. Okay, if this is coming down, so these are the targets we supposed to work on. If this is going up, these are the targets, like this change of character, this previous day high, and this breakup structure, and this higher high. These will be the upside targets. Okay, let's start how the market is going. Let's see. So again, it is taking a support in normal price. You can see it's taken support, it's taking support, it's taking support. The support is broken, normal price support is broken. As I told you, these orders were not filled already, so it has taken these orders as well. Now we can see two bullish uh, candles are forming. You can see there is 100% buyer candle is there. Here you can see this is one indication that the market have high number of buyers pressure. Here you can see an yellow candle. The scalpers can go into the trade as soon as the yellow candle has been broken. High of the yellow candle is broken. This is your target. In this one, we are not supposed to go for the call options. Why? Because the resistance is very nearby. Okay, even if the market goes, it will come back for a pullback. Then only this will go. Okay, that is how the price action concept works. Let's see. Okay, this is a pullback. So you can see if I see any yellow candle, I'm going for a trade now. Yellow candle or our yellow candle or our push candle, yellow candle or our green this blue candle. Okay. So here we can see one yellow has been formed already. This is the first one. Okay. See the small one. The small one is a doji candle. Mostly everybody knows what I'm doing. I'm just entering into the trade high of this candle, and I'm just keeping like this is the actual stop loss, but I'm just keeping like few buffer. And if I'm trying to target, what are my targets? So this is my target one, and this is my target two, target three, target four, target five, target six, and target seven, and target eight. So now we have eight different targets. Okay, so the eight targets are like 790 points. And what is our stop loss? 100 points. We shouldn't be keeping 100 points as a stop loss. But I'm sure this trade is going to hit some of my targets. Okay, let's see. Okay, here the stop loss has been hit here. You can see. Okay, the reason why the stop loss has been hit, you can see there is a wick. We kept some buffer, but still it hit our stop loss. So this is the no trade zone. Why I took this trade, I will show you. As per our condition, what is our no trading zone? This is our no trading zone, right? In between this candle. So whenever the candles are forming in between these two lines, we are not supposed to go into the trade. So this trade is an example trade. If you would have taken this trade here, if the candle is lying inside this zone, and it's likely to face a loss. Okay, this is an example for that. So that you're not supposed to take any trades when the candles are in between. That is only as a beginner. Once you become experienced, you will know the market trends, how the market is been performing, so that you will be able to take more trading decisions. So I am waiting for a strong. Okay, this is the correct indication which I wanted to enter. Okay, now let's move this trade here. We see a low candle. This is the volume divergence. The high number of probability I'm going for a buy option is here. Bottom you can see a seller, a buyer order block. You can see multiple times this is getting support 1, support 2, support 3, and this already the fair value gap has been supported here. Okay, these are the reasons I'm going for a trade. Always try to convince yourself you're going for a trade with good one. Okay, so I'm just keeping like low of this candle as a stop loss. The target remains same. Let's see now. So the previous day high, the target has been hit, but this is our first target, 51740. Let's see. So we are very close to our targets. Let's see whether we are hitting the target or not. Yeah, target 1 is done. You can see target 1 is done. It's all the way to target 2. Let me pause it here. From here, if you would have taken the trade, the target 1 is like 230 points. So here, what is the risk reward ratio we are thinking? We are thinking of 6 for the big one. But if you would have set a stop loss here, okay, there is no, the candle never came to the stop loss zone area. You can see that very well. Okay. So we have achieved 230 points in one target. Okay. So don't wait for like 50 points, 60 points, 20 points, 30 points. No. Where there is a seller zone, obviously the buyer is going to take their orders, 200% sure. So we need to join the right team and trade along with them. Okay. So we just keep on holding the trade. Let's see. The reason for holding the trade is, reason number one, our katana is below, so this can act as a support. Number two, previous day high, you can see this has marked as previous day high, this is taken as support. Number three, we have a new order block has been forming. See, this is our artificial intelligence, our new order blocks, new seller block, new support, new resistance, everything will be forming based on the market reaction. You don't have to manually go and mark them at any cost. Okay, let's see how the market is moving. So we have already done with the target one. Safe traders always exit at target one. Risky traders can hold their position for some more time. Okay, this is a great move. So target one done, target two is done, target three is done, target four is done. See, after target four, the market have reversed quickly. Okay, if this kind of sudden movement is coming, the market will be likely to go up only, because this is called stop loss hunting. Okay, if the market moved suddenly, this is called pump and dump. So the people, what they will do, they will pump the market and take in all the stop losses of these people, then again dump the market in order to take stop loss of these people. Okay, so this is how the big players are trading. So if our perception is correct, we can see yellow candles, we can see big support, previous day support, buyer order block. The market is likely to move in this direction only. Okay, let's see how it goes. So according to us, if you would have exited at that level of this trade, you would have captured 412 points. 412 points in Bank Nifty. It's a good amount. People who trade in Bank Nifty, they are aware of this. You can see what is happening. As I told you, when the market have did a quick pullback, the market will likely to move up. The likely to move up, we had a strong reasons. Reason number one, big sellers, big buyer zone. Reason number two, order block. Reason number three, you can see a volume divergence candle. Now we have another reason why the market moved here is, you can see the big 100% buyer candle is there. Okay, after certain level, what the market have done, it have reached to the same level. If you can see, this reached to the same level and did a rejection. Already there was a rejection. There was a rejection again. Again it went to the same place and got rejected. And where we would have entered into the trade at the time of yellow candle. The first yellow candle is the first yellow candle. I'll show you some zoom in. If you would have entered into the trade, break of this candle, we will be entering into the trade. This is the trade, I mean entry. This will be our stop loss. And what are our targets? Here I'll show you how we are fixing our targets. Okay, so this can help some people. So when you place your trade, assuming like you don't know what are the stop losses available here. Okay, so the first stop loss is, you need to look back, you need to look the market in the backwards way. Okay, why we need to look for it? Because this is, the buyers have moved the market, sellers are trying to hunt their stop losses. Okay, so what are the possible stop losses, like targets we are looking for here? Here we entered into this market. So the first target is this breakup structure. The second one is this higher low. The third one is this lower low. Fourth one is this higher high. Fifth one is this mid the 50% of the fair value gap. Okay, this is how you should see a trade, like how we can capture like big moments every time. So here like target 1, target 2 is done, target 3 is done, target 4 is done, 5 is done. We hold it the position till target 5. So this is like a 350 points capture in bank nifty. This is really a good amount. So while using our indicator, you will come to know what are the possible targets and how you can capture a big movements. Okay. And the other reason why we told like not to trade on the no trade zone, we can show you some examples. Because if you trade in the no trade zone, high possibility of hitting your stop losses is there. Okay. First reason, here break of this one, we have entered into the trade, but this one 100 hour stop loss, we could have lost some money. Okay, the next one, here you can see this is the no trade zone. As I told you, in between of these two, like CD zone, and this is the big previous day 5 minutes candle. As long any wick is touching or the candle is in between these, you will not enter into the trade, because if you even if you enter, there is high chances of hitting the stop losses. We call it like accumulation market or a sideways market. So never ever try to enter into this trade while these candles are touching or in between these zones. This is one zone, the CD zone is the another zone, and this zone is the another zone. What we supposed to do, what when the candle have moved till here, as soon as it reached in this zone, we should have exited. We should have hold it for long, but we should trail our stop loss here, so the sudden moment we can exit with a decent amount of profit. So that's all for the indicator overview. So if you go to the settings here, you can see this is SANSETO Trade Master. By default, all these settings will be available. If you want to change some of the colors, you can change the colors. These default settings are enough for you to make the trade. Okay. How do you create an alert? I'll show you. So we used to advise our traders to create an alert whenever there is an yellow candle is forming, so that you don't have to look into the market always. Click on this alert, click on this plus button, click on this condition, go to Sanseto Trade Master version 3.6. Click on, there is like a multiple alerts you can create. We would advise to create a volume divergence alert once per bar close, because when the candle is moving, you could see that as a yellow candle, because there will be like multiple volumes coming in and out, in and out, in and out. But you should not be considering it. Once the candle is completed, then if the candle is yellow color, then you will take your trade based on that. Okay, so that's why we are choosing once per bar close. And you can see like if you're doing it on a bank nifty, I'm putting like watch bank nifty. So this you just created alert. So whenever this candle is being formed, you will be getting notified in the trading view. We could have set, or we could have placed a buy or sell signal. Okay, but that will not make the people learn the market. Our aim is to teach you people, so you learn the market, then you start trading and you can make some money out of it, so that you can fulfill your needs. We could have removed everything, and we could have, based on all this condition, we could have put like okay sell here, or we could have put like okay buy here. If we do in that way, you will be only waiting for the signal. You will never understand the market, you will never understand what is going on the market. So we are trying to help you, or we are trying to teach you how you can catch the fish. So we don't catch the fish and give it to you, so we will teach you how to catch the fish. so that like in future you can trade on your own. Okay, so far we have seen the examples on bank nifty only, so we can do the same thing on nifty as well. The same concept, exactly the same, there is nothing changes. Exactly same order blocks, same buyer zone, same discount zone, same seller zone. If you go to US 30, you can see multiple targets. Okay, let's do one paper trade. Okay, let's do one paper trade. I am seeing a opportunity here. So the market is already seen this candle. Okay, so this is your Dow Jones. I am going for a selling opportunity, going for 10 on 100. Let's see, this is only a paper trade. Okay, so my stop loss would be above this candle, and my target would be till this order block. So the targets can be different levels of target, as I would say. So the first target is mid of this candle, mid of this candle. This is our first target. Our second target supposed to be this mid. The third target supposed to be this normal price, and the fourth target supposed to be this buyer zone, this zone, this change of character, and this is our fifth target. Okay, let's see. This is our entry. This is our stop loss. This is our target. So here we are looking for 1 is to 4, 4 is to 1 ratio. So we are risking 29 points and we are looking for 120 points. Okay.